Hey, this is Jeffrey with another edition of Stock Smart, the February 17th, 2021 edition. Hope you're all doing well. Market's unwinding a bit today as, the S&P oscillator, as we've been talking about, it's overbought. You can take a look at the constant creep up in the 10-year, again, which is an indicator. Once we see the 10-year get a little bit higher, when we get it into the 2 to 3% range, then investors in equities will really have to start being concerned. As people look to invest in safer havens, like the 10-year, people will be pulling money out of their equities and looking for safer places. VIX is up again today, about 5 to 6%. So again, that creep is also a little bit of a warning indicator that we may head into a downturn a little bit in the market. We're about down about 70 basis points today. Watch for a continuing unwind for the next week or so. And then I would say the troubling period really looks like when we get into the out of earnings, which will be in the next 2 weeks. And we're going to hit that lull period. I really think that we're not going to have as many buybacks because there is concern about corporate taxes potentially going up. And if that is the case, then companies are going to want to preserve their wealth, especially in the first quarter. Let's look at Bitcoin for a second. 5% of CEOs surveyed by Gartner Research said that they will consider putting Bitcoin on their balance sheet. Again, so you're seeing a trend and a movement where people are moving into, and companies are moving into the idea or taking note of the idea that they could potentially have Bitcoin as a currency that they either take for payment or put it on their balance sheet as some type of an investment. 84% though said they would not. So it's not widely adapted yet, but it's starting to be thought about more. EV battery technology, QuantumScape, stock we talked about last week, moving up, one of the few stocks moving in the right direction today, up about 5-6% today. QuantumScape released, their earnings were still poor. They're still pre-revenue because it's, their technology isn't quite to market yet to be sold. But they had some really interesting information they released about the prototypes for their batteries. So they've created a multi-layer solid state battery, and the capacity and the retention of the multi-layer battery that they've been testing in the prototypes increases the battery life. So that's really excellent technology. So we all know how limited if you've had an electric vehicle, how limited the charge will be, 2 to 3 hours, then you have to stop. And if you get a supercharger, you can recharge. But as the battery technology becomes better and better, you're going to start to see more and more people going to EV cars. It still appears to be an inconvenience. Some people will never want an EV car. Some people will want the sound and feel of a real engine. And that's something an EV car does not have. But as technologies like what QuantumScape is developing start to get better and better, and EV cars can run for longer and longer periods without charging, you're going to see more of a demand for electric vehicles. So again, it is the future. It is coming. They're building a pre-pilot line in San Jose, which is like a pre-production line. Essentially, they're building the prototypes there. It's not a full plant. So they're also, and one other thing about QuantumScape, they're getting into vertical takeoff and landing gear, meaning they're essentially either helicopters, batteries for helicopters, or airplane or air travel. So that could be a space where QuantumScape starts exploring. Now, we talked about the Berkshire Hathaway 13F. It did come out yesterday. There weren't a lot of surprises in it. They raised their stakes in companies like AbbVie, Bristol Myers, Merck, which is a stock that I talked about in terms of the dogs of the Dow. Merck was one of those companies with a very good dividend aristocrat. And they raised their share from 22 million shares to 28 million shares. And they also raised their stake in Restoration Hardware. In terms of new things that they got involved in, and those are the interesting positions, Buffett took a position in Chevron, and it's new, about 50 million shares. We talked about this last week. We talked about how when we looked at the CPI, that inflation or the rise in prices, that energy prices overall were up about 7%. And Buffett, the stock that we focused on rather than Chevron, we were in Exxon. And Exxon actually did better. Exxon is up 50% or so over the last 4 or 5 months if you got in November. So Buffett did very well with Chevron as well. This is the case where if you get into one of these positions now, and Chevron was up a little bit today, mostly on the Buffett news and people buying it. Did you miss it? So that's the question. So let's look at a stock that Buffett added to in their holdings over the last quarter or so, and that's Chevron or CVX. Our thoughts, or my thought, is that you missed it. If you're going to buy it now, okay. But we've already seen the big energy price increase go up. When he bought the position, he probably bought it somewhere in the 70 range where it was a few months back. And now it's up at 96. So it's up over 30% in the last 90 to 120 days. Now our focus again was on ExxonMobil, XOM. We owned it for a bit, noted the inflation. Prices were up, again, over 7% in the latest CPI. We were in Exxon around 32. Now it's up about 52 to 52. So, if you remember, these are seasonal energy plays, and energy in general, we're seeing we're getting a cold spike, we're getting in Texas and the South. So that increases energy prices. Then we're also seeing a spike in cold weather and storms in the Northeast. So those are kind of like seasonal plays, and that's something I want to talk about in another episode. But seasonal plays for stock, it's a big part of a fundamental calendaring system if you're going to be an investor. So I got a question.
The average
from Sally,
investor.
and Sally says, and thank you for sending questions again. We continue to grow. The podcast is getting thousands of downloads, and we appreciate that. Getting 20 to 25 questions a day. You can send me questions at jeffrey@jeffreycamus.com. And Sally wants to know, when's a good time to short a stock? Well, it's really never a great time to short a stock. It's risky and dangerous business. And essentially, it exposes you to unlimited risk. Remember, if you're short a position, meaning you're betting that the stock is going to go down, you could be let me give you a perfect example, Tesla. If you were short Tesla last year, many were. Tesla had a big short position last year. If you were short Tesla last year and you've seen it go up and up and up and up 100x, 200x that it's gone up, you would have lost a lot of money. And so a short has unlimited risk, meaning it could go to the sky. So as high as a stock could go, that's how much risk exposure you could have in a short. So the risk is high. But let's look at a stock. Let's look at a strategy that a hedge fund would use in shorting. So when a company goes public with their IPO, and let's use an example here, Palantir, because that's a great example, PLTR. Now let's say the stock is really done well since its IPO, which Palantir has done. Palantir is up 300% since it first was listed in September. Generally, insiders will own shares of companies like that. That's the incentive to be there. They'll give gifts of stock, or they'll give them stock options if you're an employee at the company. And generally, that's a way to get talent. It's also a way to cut your overall exposure to payroll expenses. So insiders are always looking at their stock as another salary for them. So Palantir is a great example of a stock that would be shorted by a hedge fund. And let me explain the dynamics of this. So when you work for Palantir, Palantir says, okay, you get stock options or stock vested, whatever, in the company at X. So if you have Palantir at say like $5 a share, and now Palantir is up $20, $25, $30 a share, when the lockup period expires, and generally that's either 3 months or 6 months. In Palantir's case, it was a 6-month expiration. And we're looking at their lockup period expiring approximately this week, either February 19th, somewhere around there. That's an intriguing short for hedge funds. So hedge funds will start building their position knowing when the lockup date expires, especially in a stock that's done so well like Palantir. Because once the lockup expires, that means insiders who own the shares, who worked for the company or were given insider shares that were locked up for any reason, can now start selling. And so what you'll see is a supply of stock that hits the market. Supply exceeds the demand, the price starts falling. And so that's a time when a hedge fund or a strategy firm will short a position. So if you're looking at Palantir right now, you may want to be careful that it could be a little bit volatile over the next couple of weeks as insiders start to sell their position. And let's look at a couple IPOs of the last year. Snowflake. So Snowflake went public at $120 per share September 16th. And their stock doubled on the first day. It hit $390 in early December. And then Snowflake had a partial lockup expiration around December 15th. Well, the stock went down from its all-time highs. Date finally arrived. Stock dropped about $330 a share and was trading less than that. So Snowflake is one that got hit, and people who shorted that benefited from that little opportunity when the window opened for insiders to sell their shares. JFrog, another company that went public, same day as Snowflake, Started at $44 per share, closed at 65 or so on the first day, soared to the 80s in September. Also had a pullback when they had an early lockup period released around November 25th. The stock closed down that day. So this is the classic time when you'd want to be in a short position. Now, I'm not recommending a short, especially to anyone, because it is extremely risky business. But a hedge fund, a firm that has experience, knows what they're doing, or is going to put a short on, that would be a time to put a short on. So hey, keep the questions coming. Have a great day. Thanks. We'll see you next time again on Stock Smart.